Okay, good. What's going on, guys? We have Richard Jackson here, who is, I'm going to give him an opportunity to introduce himself, but he's been in the industry for 20 years, working as a trader, runs his prop firm, coaches traders, mentors traders, gets them up to a professional standard. So I thought it would be extremely interesting to have Richard on today so we can have a bit of a discussion. We've got a general guideline of what we would love to discuss on prop firms, on what makes a successful trader's mindset. Richard sharing some gems from the last 20 years of his experience. But we're also just going to have a general discussion. I think you guys are going to get a lot of value from it. So first and foremost, welcome, Richard. So great to have you here. Love to hear a little bit of your story from your perspective. And yeah, just love to hear about your story and your mission.
Okay, well, it's a long one, that's for sure. So Lepus Proprietary Trading, we are a group of guys that we are private traders. Okay, so we don't take investor funds. We don't take anything from the public because we don't want to deal with Australian financial services laws. I've been trading for 20 years, 2002, I think we said before.
Yep.
And that really was started off mini futures, so on S&P, Russell, YM, etc. And then, then into FX. There was a big push in FX in the late noughties or the mid noughties. Mm-hmm. Everybody was hot and throbby around the CFD type of idea. But, we've really stuck to what we do, which is derivatives on index futures and CFDs, and that's it. But I guess, it was never easy at the start. Never is for anybody. Mm-hmm. And I've shared this with some of my trainees that there's been a few times where there's, a couple of busted screens in my garage because, you get so frustrated with it.
Yep.
Especially when you make all this money and then you hand it all straight back the next week, right? And I'm sure that everybody's had that similar type of experience. I saw you smile there a little bit, Pat, right?
Yeah.
Because, we've all gotten to that stage where we're being very heightened with the results or our behavior or whatever it is, or something that we just don't know what's going on. But go back to what you were asking me. Yeah, so 20 years into it, written a big handful of algorithms, and we've gotten to a stage. I was a investment manager at one point, but I moved away from being an investment manager, running an MDA, into just running prop firm. Okay, because that's where I want to sit. But yeah, we just take traders off the street or guys off the street, even if they know nothing, because we model ourselves off a book called Turtle Traders.
Yep.
The Way of the Turtle is the book. And that is, there was a bet with a couple of fund managers back in the 80s. They said, can we take a couple of randoms off the street or a handful of randoms off the street and see if we can turn them into traders? And therefore, it was a nature versus nurture type of argument. And that then turned into, one of the fund managers said, yes, we can do it. The other one said, no, we can't. And that turned into, out of those traders, only really one of them really could make it, okay? Mm-hmm. Because most of it was around behavior, right? Mm-hmm. Around not knowing the system was the easy bit, but their behavior, their fear of getting in. Are we looking at the right thing? So we've modeled ourselves off the same thing. So I bring guys in to train them, bring them up to a certain level. Mm-hmm. And if they're good, they're good. If they're not, they keep going. They keep practicing, okay? But really, I'm training them to trade for me in the end.
And a quick question on that, Richard. Now that we were having a discussion on this a couple of days ago, you said you've worked with a couple hundred traders that've been through your program.
Yeah.
Now that you have that insight and you've seen a couple hundred guys and girls go through your program, are there certain things you look for when bringing on a new trader? Have you come
Oh,
to?
yeah. The what I look for is their willingness to do it, right? Because a lot of people will fall off on the wayside very quickly because it's too hard.
Yep.
There's a lot of detail. As I was saying to you before, when I first started doing this, I wrote a manual, which is about 400 pages long, of everything that I could ever find. Through all the books. If you can see my books through there, there's about 200 books sitting on my shelf over there. So I just picked all of the bits and pieces out of it so that I could understand what's going on. Then I rewrote it into my own manual, and that's what the course is now, right?
Yeah.
Or the training, I should say, not course. And I say to the guys when I train them, they go, "Oh, this is awesome manual, whatever," and I go, "Mate, I didn't write it for you. I wrote it for me."
Yeah.
Right. So, there's so much detail in what we need to know that it's very important for us to have to write this stuff down and go over and over and over it. Some of the best traders that I've trained, they go over my material all the time, right? Now, I was thinking about this morning, actually. We've heard the Shakespeare saying, "A jack of all trades is a master of none," right? But oftentimes a master of one is a master of none, right? Everybody forgets the second part of that bit, okay? Well, what we want to be, we have, as traders, I believe that we have to know everything, right? Not necessarily things that are not correlated to what we're doing, right? But we need to know what each of the strategies are that are possible in the market. Are we looking at double tops, double bottoms, heading to classic patterns? Are we looking at harmonic patterns? Are we looking at divergences? How many points of Elliott wave are we in at that point in time? Where's our SR levels? Where are our trend lines, etc.? Are we looking at the bigger time frames versus smaller time frames? We're not got blinkers on, that type of thing, right? So if we've got all of that running through our head as a syntax, then we have an understanding of what's being played at that point in time, right? Now, we're not going to get it always right, but we've got a better edge than anybody else. Because if we've got a classic TA pattern being played out at the same time, I'm not going to go and try and play something else before that previous pattern is over, okay?
Right.
So it's very important that we have a broad knowledge of what's going on so that we're not a master of one, right? However, on the flip side to that, it's important for us to become an expert in something, right? Now, I've seen a lot of guys out there go, "Okay, I'm going to set up my screens like this, right, behind me, with probably more screens, 8 screens, with all 28 pairs, FX pairs sitting on it, looking at exotics, looking at this, that, all these other things, okay?" Which is just overwhelming and confusing. Right? There's no way on the planet that you can handle that much information, okay? So what we want to do is we want to come down and we want to just be a expert in one field, okay? My expertise sits in E-mini S&P, okay? Now, I do FX, and some of my guys, I've got another trader who's an expert of gold. That's all he trades. He only concentrates on gold. There's other guys that I've got as well. All they do is Euro USD, Sterling USD. That's it. Right? They're not trying to be huge. They're not trying to be a hero, right? So I think that I'm going to digress here a little bit as well, is that when we're traders, it's very humbling, right? There's no heroes in trading, right? And if you're a hero, it means you've just taken a bet and you got lucky, okay? But a consistent trader can't be a hero. The ego disappears pretty quickly, right? So I think, have I answered your question?
Yeah, you have. I've got an additional follow-up question on that, because you mentioned a very interesting point on, I guess, learning wide, knowing a lot of different strategies, knowing what's going on in the market from multiple different angles. but also being a master at one particular thing.
Correct.
Because I found this in my own journey as well, where I've learned a lot of different strategies. Some have resonated with me, some haven't. But now I trade a very simple system that I know resonates with me. It works with everything I do, and that's what I want to become great at. My question for you is, because I know there's a lot of guys and girls watching this who've been through that. They've learned a lot of different things. Maybe they can still learn more stuff, but how do you manage the paradox? Because there would come a point in the market where you see contradictory information, right? One of your systems is telling you, right, this may be a buy signal. One of your systems may be telling you it's a sell signal. Now that you have such a broad awareness of what's going on in the market, how do you manage the paradox of contradiction?
Because you're always going to get conflicting signals. Okay, the art to it is to pick which one you think is going to be the stronger of the two. Okay. Yeah, there's always a conflicting signal out there. There's always you can always convince yourself of this is the right way to go, or this is the right way to go. Okay. If you identify that you've got a 4 hour, 50% level or 618 level on 4 hour, that's obviously going to be a lot stronger than something conflicting on a 5 minute chart. Obviously, because the bigger the time frame, the bigger the player. Yep. So what we're trying to do, and here's a little bit of a secret into how we do it, is that we try and find those areas of confluence. So if you go to the Aussie US just recently, so what's the date today? It's the 13th. 13th, yeah. There was a double bottom last week on there that said it sat at 67 cents. So we've got 67 cents, we've got an SR level, we've got a double bottom. So those three things together are going to be stronger than anything else. Okay, so those areas of confluence or convergence of different points or reasoning, so top-down reasoning, will typically give you the stronger signal. Now, it doesn't always work, but the next step from that is to make sure you've got a good risk to reward. Okay, because if you're wrong, you just want to take a small stop on it. And if you're right, you can let that thing run. Right? And the problem with traders is that they cut their winners short and let their losers run. Okay? It's got to be the complete opposite, and it's counterintuitive to human psychology, right? Because as soon as you see that see it go into the green, you want to take the profit. But when it's in the red, your ego says that you don't want to lose it.
Yep.
So you move your stop away, right? That's the trap. Okay, and it's only with experience that you've got strong psychology, strong behavior, that you can actually sit down and let the thing run.
Yep.
And this is what I try and encourage all my traders to do. Just drag your stop in to break even it and let it go, right? Okay, but we do know where the targets are, based on all the SR levels and TA levels and things like that, right?
Now, you mentioned psychology, human psychology, Richard, and I'm a huge proponent for psychology in trading. I think traders really need to learn and understand themselves on a deeper level if they want to be successful as traders. Now, my question for you, based on your 20 years of experience, based on mentoring so many traders, what is your definition of a successful trader's mindset? What does that look like to you?
Well, there's two things that make a good trader, okay? One is discipline, and the other one is patience.
Okay.
Okay. If the trade's not there, it's not there. You can't come home from work, right, bathing the kids, or cooking dinner or something like that, and trade at the same time. Okay, you're too distracted. And you've got to be able to put the time in just to wait for the right signals, the really obvious signals. One of the two key things that I say to all my guys, or in our journal that we've got, and that's part of my program, is that the discipline side is you've got to keep a journal, and it's got to be absolutely perfect each time. You can't forget about it. It's very easy for guys to forget about it, or conveniently forget about it when they're in a run of losses, right? Because their ego gets too hurt. Yep. So, and then they just go, oh, forget about it. Or they go, or you go, I'm not going to record this trade because I would never have normally done it. Well, you did do it. So you have to do it, right? Okay. And that's where the accountability side comes in. Okay. And this is why guys will come and see me over 12 months, so I hold them accountable to every single trade that they make, because I check off their P&L with their trading journal, right? And if they're lying to me, I'll go, bro, why are you lying to me, right? Because you're not lying to me, you're lying to yourself, right? So discipline, that's the first thing, yeah? Patience is you've got to be able to sit there and wait for the perfect signal to come up, right? Now, it's not always going to be absolutely perfect. All what we just got to do is got to wait for the best signal to come up, because it will always come. There will always be a double top and double bottom. If you're a swing trader, be in a trade for 1 or 2 days, there'll be a double top or a double bottom at least once a week. Okay, so it's the next trade's going to be there. If you miss it, just leave it, right? Don't come in late, don't come in early. Come in right on when you're supposed to come in. Yeah, things like that.
Okay, I want to zero in on this a little bit more. Patience and discipline. What would you say are some great practices or strategies or processes that traders can implement now? You mentioned journaling before.
Yeah.
That can cultivate those two things, discipline and patience.
Okay,
what have you seen works?
There's two sayings, and this is what I was going to go, but I forgot to do it. But in our trading journal, there's 3 sayings, actually. There's 3 questions that we have to ask ourselves every time that we want to take a trade. First one is, what are other traders thinking or saying? Okay, so what we've got to do is we've got to put ourselves into the mind of the collective traders. What are they all thinking and seeing out there, right? Not what am I thinking and seeing, what are they thinking and seeing? Because if then, the next one is what's obvious, okay? Because if it's obvious to me, then it'll be obvious to everybody else, right? Because that's who moves the market, okay? The collective herd moves the market, doesn't it? If it's obvious to me, then it's obvious to everybody else. And then the third one is a more of a statement from one of the best traders. Here we go. Trade what you see, not what you think. Okay, stop thinking and just trade what you see. Okay, because if we think we've got the ability, what comes in are some biases called cognitive bias and an availability heuristic. Availability bias, right? And they're probably the 2 most common biases or heuristics that will destroy traders' behavior. Because if you start thinking or guessing, right, you stopped trading. Yeah? Because all we're trying to do is we're trying to shift the probability, our probability curve to the positive side. Okay, so we've got a normal distribution. We're trying to get majority of wins, or our win-loss ratio and our system risk-reward ratio into the positive section. That's all we're trying to do, right? Because you're always going to take a loss, right? But we've just got to get that balance between win-loss and system arm. Okay,
so the way you promote cultivating discipline and patience are those questions. Awareness building questions.
Correct. It's awareness before you start trading.
Yep.
That's also then putting it into a journal, getting your statistics correct, right? Not your statistics, right? The real ones, right? Because everybody can write down numbers which are incorrect. It's very easy to do that. Okay. But my job really is for my trainees, right? And this partly probably your job as well through your program, is to make sure everybody stops lying to themselves, right? Starts being honest, okay? Because it's very easy just to lie, especially when you go, I wouldn't have taken that trade, so forget about it, right? Or I'm never going to do that again, but you did, right? So you can't do that. And that's where the accountability side comes in. That's what your job is. My job is to hold our guys accountable for their actions. right?
Yep.
Yeah,
And even go a level deeper than that and try and uncover why it is you did that particular
correct.
action,
Yes,
and what's driving it, and what you can put in place to mitigate that in the future.
correct.
What do you
think that reason is?
Well, it's interesting. I talk a lot about this in my program as well. If there's a reason to hide the information, it indicates the individual has shame about it,
Correct.
and they intuitively knew deep down that it wasn't part of their system.
Yes.
So it's about uncovering the driving forces of that. The most common thing I've seen is, and coming back to what you talked about before, trade what you see, not what you think. A lot of traders, before they get into positions, they have an idea of what they think is going to happen next to the market.
Correct.
and they project that onto the market.
Correct.
And it's usually those fantasies or biases that they're projecting onto the market that leads them to not trading their plan, because they're so addicted to getting that win or getting that outcome that they're dreaming about, that they, through confirmation bias and these biases that you talked about, they're not willing to take in the information the market's communicating to them.
Exactly. Exactly. And that's what can I just add to that, right?
Yeah.
You know, there's the three Stoics, right? Marcus Aurelius, Seneca, and Epictetus, right?
Mm-hmm.
Seneca wrote an essay called On Anger, because Nero was always the angry one, of course, right? But in that, and this is so simple, but it's so correct, right? Frustration, anger, disappointment, bad behavior, all those sorts of things. Ill discipline comes from one thing, right? An expectation that's not met.
Unmet expectations. Yep.
Expectations will kill you, right?
Yep.
So if you've got an expectation which is out of reach for yourself, or you've got a short-term expectation like, I'm going to click at this because I believe it's going to go up, because I want the money, right? Or because I want the win, right?
Yep.
You're going to be led to disappointment.
Yep.
Right?
Yep. And I think if traders can have that awareness before they trade of, am I making this decision out of an expectation of the outcome, or am I making this decision out of a process, and differentiating between process-based decision-making and outcome-based decision-making. Results go to the next level, Richard, from what I've seen, and also the emotional volatilities they experience in the market, they just dampen. There's less emotion.
Like system 1, system 2 thinking.
Exactly.
What was that book called? It was Daniel
Thinking Fast and Slow. Daniel.
Yeah, that's
Daniel
right.
Kahneman. Yeah, it's exactly what it is. And it's because you don't have those unrealistic expectations, because you don't have unmet expectations, you're no longer emotional. You're not angry. You're not frustrated. You're just present with the market, with what the market's doing. You take that information in.
What I usually say to my guys as well is that the emotions will never leave you, right? Mm-hmm. It's about being able to understand where your trigger point is. And when you catch yourself really early in the process of becoming an emotional wreck or behavioral bad guy, so that you prevent yourself from doing it, right? Mm-hmm. Because I still find myself getting emotional about certain trades.
Mm-hmm.
But when I find myself wanting to, now I'm going to believe, now it's going to go the other way, and it's going to go click, and I go, that's where I'm catching myself to stop, right? So, in my understanding, I don't think it ever leaves you. I think it's about your ability to capture yourself on the trigger point.
Yep.
Yeah. Before it happens.
I agree. I think the emotions are a feedback. Again, you're never going to get rid of emotions. You don't want to get rid of the emotions, because they're a very healthy biological feedback that, if you learn how to interpret, can be used to your advantage as a trader.
Yeah.
Yep.
Cool. All right.
Okay, good. Now, like we've talked about, you've seen a lot of traders come through your program. You get to work with these traders over a long period of time, so you start to see what certain behaviors, what certain things they do. Something that you mentioned before, which was interesting, is that if a trader has a high enough value on being a successful trader, meaning they want it bad enough,
mm-hmm.
that's going to be a direct correlation, because they're going to put the work in.
Yes.
They're going to embrace the losses. They're going to embrace the setbacks, and they're going to continue on their journey. And they're ultimately going to succeed if they have the right guidance.
Yeah.
But what else have you seen, Richard, that differentiates traders that are successful versus not so successful? Or is it all about just wanting it bad enough, having a high enough value?
You know, just putting the work in and having the time to do it. You know, and you won't understand the emotional hurdles that you go through until you've actually learned how to do the system. Yeah, and let's be honest, right? There are systems out there that people are trading that just don't work, you know, and they just don't be deceived that, you know, if you just keep trying at your system, that it's a good system. It could be rubbish. But when you've got the right system and the right knowledge and the right accountability and the right discipline and the right patience and the, you know, the right understanding of where your trigger points are, you know, so you're not over trading, you're not under trading, you're not FOMOing, you're not fearful, all those sorts of things. And that's when you're at that point, right? Anybody who can go get a grasp on those aspects, right, undoubtedly become a good trader. Okay. And and this is a funny thing, the excitement of a new trader versus the excitement level of somebody who's there, right, are completely different. Because that excitement and, you know, I've got this and all that sort of stuff, they're down here. They're in control of themselves, right? They just process it. Okay. So I think, you know, it's a combination of what I've just spoken about. Yeah.
That's a really interesting point on the excitement thing. Because what I've seen with my girls and guys is those who are usually most excited are somewhat blinded and aren't seeing the full picture.
Correct.
And oftentimes I get an extremely exciting message from them. I'm elated, I'm excited. And then a month later, I get a very depressed message from them saying that, you know, I've blown up, I've lost it all. So, and you made a really good point. The ones who have made it, they're in control. You know, they may be they're grateful for what they've accomplished, but they're aware of both sides, so they're very grounded.
Right. Very grounded.
Yeah.
There's no ego left in them about it. It's a process. And these people, like you just said, the traders that are up one week and then just blow it all the next week, right?
Mm-hmm.
That's a very simple fix, right? What that is that they haven't adapted to change in the market. You've got to adapt really quickly. Yeah.
Mm-hmm.
You know, you can have a nice big trend and then you think it's still trending and you're way too late in it and you just go to caca. Yeah.
Mm-hmm.
Anyway, yeah.
Now there's a couple additional things I'd love to ask you, Richard.
Sure.
You've mentioned ego a few times through this discussion. I would love to share what I've seen on ego and then get your pointers on what you think works for traders to help them mitigate that or manage it if you don't want to mitigate it. Your thoughts on that. But I'm of a big believer that the boom and bust cycle, you know, doing really well and then doing really poorly and then doing really well, that up and down actually comes from being proud and addicted to and puffing yourself up when you win. Because if you do have that big win or you do get extremely proud and you puff your ego up, you then start to think that you know better than the market. And then you again, those expectations on the outcome come in and you project low quality setups into the market. And then like you've discussed, the market ultimately humbles you because the market's never wrong.
Right.
So I've seen ego to be such a key. If traders learn to manage their ego, especially when they win, in my opinion, that's such a key thing to consistent profitability.
Right.
Have you seen a similar thing? And maybe what are some processes or things that people can put in place?
I've had traders that have done the course and done the training, and you know, they do well, and then they disappear. I don't see them.
Right.
I think that's probably the worst thing to do. Right. Go and hide away in your room, or forget about it, or get upset about it. You know, because it can be a depressing exercise what we're doing. Okay.
Mm-hmm.
The reason why I know all this psychology is because it depressed the crap out of me.
Yep.
As well. Okay. I haven't been amazing my whole career. I didn't just turn up being amazing at it, right? It took me 7 years to get a knack of it. Okay. And heaps of mentors and books and everything, right? But I was a dog with a bone. I didn't want to let it go. Okay.
Mm-hmm.
So, it is certainly a roller coaster for everybody. And you've got to be prepared for that. You've got to be very prepared. Because I remember as well going into weekends, having a win. I was on fire for the whole weekend, right? Then the next weekend you go into the weekend and a loss, and I didn't want to talk to anybody, right?
Yep.
So what we're trying to do is not be the gambler side and be consistent, and we can only do that through statistics. We've got to believe in those statistics. But yeah, I think it's just something that will come with time with a lot of guys, right? You can't force an ego out of somebody. Okay, they've got to fall off the cliff themselves, and go through that experience. Because you in some respects, nobody really understands it until they experience it themselves, right? So, but I guess that's because that's where you come in, isn't it? It's you come in after they've had some trading experience.
Yep.
And you are there to show them those doors where they've already experienced that, right?
Definitely.
Like your program would or wouldn't be suitable for a brand new trader.
Yeah, predominantly, I'd say 99% of the traders that came in have already had six months to a year experience. Yeah. So yeah, I primarily focus on traders who have that experience, who've already been through enough cycles of the market of doing really well and doing really poorly, because I think that's very important information and data to have. If you know how to interpret it, you can learn a lot from those cycles. For me personally, I went through a couple years into my journey. After I learned a system, I thought I knew it. This is where the ego kicked in. I picked up a round of funding, 6-figure funding. It was like $100,000 worth of funding. And I ended up having an extremely poor losing streak and not knowing how to manage the capital, not knowing how to manage my psychology.
Yeah.
When I did really well, I started projecting low quality setups into the market, thinking I knew it. Yeah. When I did really poorly with that capital, I was too fearful to act. So it was an emotional wreck, and I ended up losing that capital, giving it back.
That's similar to what I've experienced with some guys that I've brought on board with me, and this is where I'm very careful, right?
Yep.
Is that they can, because what I do is I get guys to prove their trading with their own money, okay? So it hurts them a little bit, okay? So I can really see what their behavior looks like, okay? So, and if they do well over a 3-6 month odd period, that's nice and consistent, then I put them onto bigger and bigger money, okay? I'll put them onto my money. But if I've ever, if I go too early and put them on something really big too soon, right? All of that psychology they fall apart. Okay? Yep. They're scared, they're nervous, they don't know what to do, because it's turned into my money and it's large, right?
Yep.
And they want to perform, right?
Yep.
So they may be taking a signal where they haven't really thought about it too well. If it doesn't go in their favor, then they get that frustration and that they get triggered.
Yep.
And then maybe they take some silly stuff as well.
Yep.
Right? So, that's probably the biggest thing that I've learned in doing what I'm doing right now is the psychology of large money.
Yep.
Right? Not just small money, because we can all take a couple of grand, and if we blow it, it's not going to change our lives, is it? Right? If I give you 100 or 200 grand, that's somebody else's money.
It changes things.
Freak out, don't you?
Yep. And the fact
that's where I've got to control these guys and really that's where, look, when you play football match, okay, I'm into footy, right? It's very similar, but you've got the coaches there to keep them on point and consistent with what they're trying to do, right? Because they can't see when they're on the field what they should and shouldn't be doing. Does that make sense?
Absolutely.
I guess that's where that's my job, I guess, as well.
Yep. And you're so right. It's like when you have that money, it's someone else's money. Winning feels super, super good, and then losing is extremely depressed. Those pairs of opposites again. And it was that experience for me, taking on that capital, managing other people's money, that really highlighted the vulnerability of human beings as traders, and the importance of good psychology. And I mean, that kickstarted for me years of study on human behavior, psychology, neurology, and really, and this sort of resonates with you as well. Everything you've created was to help you become a better trader. Your training is probably exactly what you needed 20 years ago, and exactly what you need to go through. It's no different for me. It's like everything I created on the psychology, the human behavior stuff, is everything I needed.
Done for ourselves, right?
Exactly.
I wish I had myself 20 years ago.
Yep. So super interesting with that. Are there any other additional things, Richard, that you have found useful in your journey, or you found useful to educate your students, your guys and girls on?
Stick on the psychology side. It's very important for us to, and this is part of maturity, to have boundaries. Okay. What are we going to let in versus what are we going to hold a brick wall to?
Right.
Okay. And, we can have like this idea about external and internal boundaries. Yeah. Those external boundaries, easy concept to understand. Like if, you call me a BS or something like that, I can just go, yeah, whatever, mate. Okay. That's an external boundary. But an internal boundary is you talking to yourself, right? What we've got to do sometimes is not just identify the emotion, the name of the emotion that we're having at that point in time, but also to hold your hand out to it, right? And say, stop, okay? Because very easy for us to go back into our reptilian brain and lose it. Yeah. Punch a screen, throw a keyboard, yell at the dog, that type of thing, right? But what we've got to do is we've got to be able to have an internal boundary to say to yourself, this is the emotion that I'm experiencing right now. I'm going to push it aside and say, stop hassling me, right? And that's a very key, or it helped me from completely losing it, to staying calm, right? So I think that's one thing that I think everybody should learn.
Excellent, very well said.
Okay.
I'm a huge proponent for that, learning to understand what's going on in your head and learning to manage that as well. Now, Richard, if individuals are wanting to learn more about you or find some more information on you, where's the best place to find you?
Okay, so Lepus, LEPUS, proprietarytrading.com.au, 12-month program. But I would like to do something together with you. So we'll integrate the two of them. But we'll decide on that later. Okay. But if anybody wants to find us on Discord, I'll give you my Discord channel and you can put it in the comments below. And I'll put the web address in the comments below as well. And that's it.
Excellent. I'll put everything in the description so people have access to that. Amazing. Richard, thank you so much for spending the time having this discussion and sharing some extremely useful gems as well. I've no doubt the audience is going to get a lot of value from this. So thanks a lot, Richard. Nice speaking with you.
No worries. Thank you.